Islamic banking in Malaysia. The Islamic finance industry has been initiated and developed in Malaysia over 30 years ago, and to this day, it has no intention of slowing down. The implementation of the Islamic Banking Act, 1983, enabled Malaysia's first Islamic bank to be established, opening up various channels for the liberalization of the Islamic financial system and the sprouting of several Islamic financial institutions. Malaysia is the leading country in terms of the Islamic capital market and houses 16 Islamic banks. Bank Negara Malaysia, BNM, in a recent strategic paper, noted that the market share of Islamic banks in Malaysia quadrupled from 7.1% in 2010 to 28% in 2016. However, the industry's annual growth rate slowed from 24.2% in 2011 to 8.2% in 2016, signaling a need to explore new opportunities for sustained growth. In January 2007, the total assets of Malaysia's Islamic banking system, consisting of Islamic banks, Islamic banking system of commercial banks, and Islamic banking system of investment or merchant banks, stood at Ringgit Malaysia 126 billion. 10 years later, as of January 2017, the figure had risen to Ringgit Malaysia 584 billion. By June 2017, the industry's total assets reached Ringgit Malaysia 610 billion. Islamic banking assets take up 27% of Malaysia's overall banking system, whereas takaful penetration accounts for 14.8% of the population. A growing Muslim population is likely to drive an even bigger expansion in Islamic finance, and it is estimated that the worldwide assets pertaining to Sharia-compliant finance will double by 2018 to Ringgit Malaysia 15 trillion from 2013. Malaysia demonstrates a greater consistency in growth with superior asset quality. The better performance of Malaysian Islamic banks could be explained by its relatively established franchising, effective market penetration, a more diversified portfolio mix, and strong regulatory controls. The Malaysian Islamic banking industry comprised of 27% of the total banking system assets in 2015. The Islamic finance industry must strive to achieve resilience and robustness, whilst being able to attract Muslims and otherwise. In order to garner interest, respect, and recognition worldwide, it should work on continually repositioning itself to become facilitative. One of the challenges the industry faces is the lack of awareness. This is due to the shortage of qualified field experts who can potentially educate and relay to the general public regarding the alternative modes of Islamic banking, investment channels, and Islamic insurance that are otherwise going unnoticed. Training and development of the human capital involved are required to allow for greater awareness among potential consumers, as well as the generation of innovative products. Legal and regulatory guidelines and frameworks should be accommodating and resilient. Dispute resolution mechanisms need to be in line with Islamic teachings to avoid mishaps and inaccurate legal judgments in Islamic banking cases. Malaysia has recently taken the financial technology route, known as fintech for short, by incorporating Islamic concepts to its financial regulatory guidelines. An Islamic finance initiative that is bank intermediated, called the Investment Account Platform, IAP, is Malaysia's first fintech platform, which could renew the role of Islamic financiers to investment intermediaries. IAP was launched by 6 Malaysian Islamic banks, with an initial investment of Ringgit Malaysia 150 million, and its main purpose is to bring together banks, financiers, and establishments seeking funds in one place. Moreover, the 6 banks backing the initiative will contribute to a margin of increased accessibility, reach, and price transparency to potential investors and other capital seekers. With the help of this digitized platform, key industry players are able to convert operational models into much more efficient and effective ones of a much greater scale and degree of specialization, with minimum wastage and enhanced customer experience.